Ready? 5, 4, 3, 2, 1. Hello, everyone, and welcome to today's podcast on how to build a kick-ass offshore team. Today we have several guests with us. Today we have Phil Whitman, we have David Wolfskehl, and Shawn Parikh. And so before we get going, I'd like each of you to introduce a little bit about yourself and who you are in your business. Now, Phil and David, you're from Whitman Business Advisors, so why don't you go ahead and tell us a little bit about that?
Sure. So I'm Phil Whitman, President and CEO of Whitman Business Advisors, and we are a firm dedicated to helping CPA firms grow. We've developed something that we call our six-pack of services. So we help firms with merger and acquisition, talent acquisition, training and coaching. We do partner retreats, practice management consulting, and we have something that I'm excited to share with you. It's called the Practice Growth Multiplier, and PGM for short. That PGM is the ability for firms of all sizes to leverage the skill sets that are available that they don't have on their team so that they could bring bottom line revenue without adding one new staff person or one new client.
That does sound interesting and great. And so, Shawn, with Entigrity, give us a little insight about what your company is about, Shawn.
So I'm chairman of the company, Entigrity. We are an offshore staffing company. So we are headquartered out of Houston, Texas, and we have a small team of 8 people here in the United States, and we have about 600 plus people in India. Primarily, not primarily, exclusively, we work with accounting firms. Right now in US and Canada, we work with almost 700 plus accounting firms today. And we have been in business about 8 years now. And our focus has been to help accounting firms with #1 challenge of finding and retaining quality staff.
Great. Okay, well, today's topic that we're going to go with is the question we're going to answer today: is bigger actually better? And we have lots of different contrary views. We both have both positives and negatives and all this type of thing. And so we're going to have kind of just a general conversation about that and how that fits in the big scope of our industry and what's going on. And so to kind of kick us off, we'll have Shawn kind of introduce the topic a little bit, and then we'll take it from there. Go ahead, Shawn.
Sure, Mike. Thank you. So before we even get into the topic that is bigger or better, I would like to put this a little in perspective. Probably 4 or 5 years back, I think Jim Cramer, host of Mad Money, coined this term called FANG 5, which signifies the 5 big technology companies called Facebook, Apple, Netflix, and Google, and Amazon. And during that time, their market cap was about 1.1 trillion. And people started believing that they have reached their peak and the saturation point. And look at them now. They have become 6 times in their market cap from where they were in probably 2013 or 14. So it's whether it is bigger, whether it is better or not, but for sure, bigger is getting bigger. Why bigger is getting bigger? There are some reasons around it. I mean, I was reading an article probably two or 3 days back of one of the developers, one of the early developers of Amazon, which mentioned, now he's no more a part of Amazon, and he used to be the next colleague to Jeff Bezos. He mentioned that Amazon is using every data point to sell their private label on their platform. So the rules of the games are changing. Traditionally, what we learned in economics was there is a marketplace, and then there are buyers and sellers. But what happens when marketplace itself become a buyer and a seller? So in a nutshell, these big players are dominating the space. Although they claim to generate a lot of lot of opportunities for small business, like Amazon claims that they are giving opportunities to hundreds of thousands of business, but nobody knows how many small business are getting disrupted. So whether it is good or bad, the fact right now is bigger is getting bigger, and because of their deep pockets, because of the changes in the rules of game, because of the deep spending in R&D, because of the huge cash on their balance sheet, and because of multiple reasons like that. So definitely bigger is getting bigger from what we understand.
Right, yeah, and so thank you. That's a good introduction. You're right, that is the case. Things seem to be getting in that area, especially bigger and bigger and bigger. So Phil, how does that fit into our topic today and what you're thinking?
Yes, so first and foremost, I'd like to premise that at Whitman Business Advisors, you'll hear us saying all the time, it's your life. And I'm sure we've got plenty of CPAs on the phone right now viewing this, and it can be that their desire is to remain small. Others might desire to merge up, or a smaller firm might desire to merge additional partners in and grow that way. And we're not going to be sitting here telling you that you're a nail and we're a hammer and you must merge and you must grow and you must be bigger. But today, I'm going to take the position that bigger is better. And my colleague and partner, David Wolfskehl, is going to take the position maybe bigger isn't better, at least when it comes to the CPA firm arena. So I'd first like to start out by saying, bigger firm, bigger clients. Bigger clients, bigger fees. Bigger fees, greater opportunities. Greater opportunities for your partners and for your people. Additionally, when you look at a bigger firm, they have the ability to service a client in more ways than just tax and audit. They have specialty tax services. We know firms that have sales development training. We know other firms that have all sorts of specialty credits, not to mention things like cybersecurity, HR, consulting, technology, assistance and support, recruiting. I mean, it just goes on and on. And when you're bigger, if you're a small firm and you go bigger, well, you know what? You could take off that administration hat. You don't have to worry about HR, IT, finance, facilities, marketing, business development. That becomes someone else's baby. You go to a large firm, they got an HR department. Maybe they got 3 people, 5 people, 10 people, 20 people. Same thing with marketing. Same thing with IT. So now, what are you going to do with all that extra time? That time that you spend running your firm, which clearly is not the best value use of your time. Okay? Your best value use of time is servicing your clients, creating new opportunities and bringing business in. So all that goes away. And how about this? Bigger firm, probably a greater chance to recruit and retain talent. But what that does is it creates a challenge. Even the bigger firms that we work with, it's not like people just coming across their plate. There's a shortage of talent. We're at near full employment. And, you know, you don't have many passive candidates out there. I mean, candidates that, you know, are on the market. All the candidates are passive. They're in seats. They have their butts in seats. And you got to pry them out and create an opportunity that's really compelling. Otherwise, by their very nature, they are staying put. So when I look at even the bigger firm, an organization like Entigrity that does offshoring and has 1,200 plus staff members available. And people have this wrong connotation of what it means to offshore. I mean, they think that their work goes into a big pot and whoever's available takes their work, and who knows who's doing their work. And I know, because we have clients that have begun the process of using Entigrity. And Entigrity works with more than 500 firms nationwide, helping them support the new business development that they bring in. So many times I go out to firms, small and large, and you know what they say? We've had to turn off the business development spigot because our concern is we're going to bring in the work and we don't have the engines, we don't have the horses, we don't have the ability to get that work done. So no, we're not growing. Costs continue to grow, salaries continue to increase, and top line revenue is growing, but partners are making less money. So the offshoring opportunity is one that provides incredible leverage and the ability to never have to turn off that business development spigot. The last thing I'd like to highlight before I'm going to give David an opportunity to dispel what I've just outlined to all of you is built-in succession and transition. Okay, for those of you that are sole practitioners or small firms that have not developed your bench of future partners, you may have bought your practice from someone who came before you. You may have built your practice on your own or with a partner or two. But who is going to buy you out? Who is sitting there ready to carry on what you've built while we're in an environment that is changing? The CPA firm industry is one that itself right now is in transition. When you look at the traditional bread and butter firm that does tax and audit and nothing more, no advisory services, those firms are in a very dangerous place. Small changes can have incredible impacts. Look at artificial intelligence. Look at blockchain. And everyone was thinking, yeah, that's 10 years away. And no, it's happening right now. Right this very minute. There's real-time auditing, okay? And what we know is there have been times before when the biggest of firms, the big four, came down to eat your lunch, whether you were a mid-sized firm or a small firm. And when you're competing in a marketplace and the big four can come in with a fee proposal that's the same or sometimes lower than yours, whoever's making that decision, for them it's easy because no one is going to fault them for saying, oh, I think we should go with Price Waterhouse instead of Whitman Business Advisors or whoever the mid-sized firm might be. So I think that for the reasons I've outlined, bigger fees, bigger clients, more service offering abilities, getting out of that human resource and administration business, the ability to recruit and retain people better, and succession and transition. That's why at this very moment, I think bigger is better. David?
So my name is David Wolfskehl, and I'm a senior managing director at Whitman Business Advisors. And when I think about, and no disrespect to Shawn or Phil, but bigger is better is like so 2008 or whatever that song is, right? That's about yesterday, right? Because yesterday the smaller firms couldn't compete. Yesterday the smaller firms had to be dependent on their local marketplace for staff, for clients, for those type of things. But bigger isn't better anymore. Bigger gives you more bureaucracy. Bigger gives you more bricks and mortar, which makes it much more difficult for you to be nimble and take advantages of the opportunities, right? Nimble doesn't, bigger oftentimes does not bring higher profitability because you have these layers of management. Bigger doesn't get you the culture that as a smaller CPA, I've built my career around. I've built my family. And when I talk about family, not my personal family, but my work family, my client family. And bigger doesn't allow me to have the culture, the business processes that fit my family. And so I don't believe that bigger is better anymore. I believe that's 2008. Because how do smaller firms compete with larger firms? We outsource staffing, not looking at our little local market and putting an ad in the newspaper like we used to. We outsource. We offshore our staffing to a firm like Entigrity. We offshore our non-core businesses. So I need a business developer, I go find one, right? And perhaps I use social media or other tools that aren't 2008 to compete with the big guys. So I believe that in today's environment, smaller gives you the ability to be nimble. Technology gives you the ability to be anywhere in the world. And if Entigrity brings us staffing in India, we can compete with the big guys with the quality of staff. We can use social media to compete. And we can find resources anywhere in the world now instead of in our local marketplace. And so I think bigger is better is a 2008 equation.
So, David, if I can ask you then, so I'm a partner in a small firm, and I get a business development opportunity to do a $30,000 or $40,000 audit, and part of that requires an SSAE 16 SOC 1 Type 2 audit. And my guess is you, as my partner, just as I, would probably scratch our heads and say, what's an SSAE 16 SOC 1 Type 2 audit? So let me ask you this. I'm in my big firm and I walk across the hall and I talk to my QC technical guru, or I pick up the phone and I call the national office and they say, oh yeah, Phil, don't worry, talk to that Mike Goossen guy. Mike, he's the expert in SSAE 16 Type 1 SOC 1 Type 2 audits. What are you doing?
So what am I doing? So first of all, even though the person in your big firm might be sitting right next to your office that can do that for you, there's a chance you don't even know who that person is. And there's a chance when you call the national office, when they look at their priorities, maybe your audit is the most important, maybe it's not. So just because you think that they're next door to you and that gives you a huge advantage, I don't believe so. Whitman Business, we developed that practice growth multiplier to give those smaller firms access not only to things like additional revenue sources, but also expertise that is ready to help them no matter where they are. Because this is 2020, the world is flat. And geography means a lot less than it did back in the day when bigger was better.
So,
Shawn, any thoughts?
Yeah. So just to kind of balance the perspective of Phil and David, well, we can still debate on whether big is better or not, but definitely small is more beautiful than bigger. Right, David?
Absolutely.
We all agree to that. So, I mean, my perspective over this topic is, of course, agreeing to what Phil is saying, that you should be aspirational of becoming bigger. I mean, growing your firm. You should always want to, have that aspiration to grow and, build your practice, acquire practice, add more services, add more clients, increase your fees. So that way, I agree that you should have that aspiration of growing. But when I look at this specific topic from the standpoint of economy, well, consolidation brings, less jobs. Consolidation means lesser opportunities. Consolidation means driving towards monopoly. I will always, let me give you an example of Intuit. They started this business of live bookkeeping. Well, I personally feel, they might be doing, everything legally correct. They have, they have lawyers getting paid $1,200 an hour, so they might have researched this, more than us. So, but I think morally, they are hurting, the community of accountants and bookkeepers who really built into it.
Well, it's very interesting you say that, because when I look at our profession, you're right. The very people that CPA firms rely on for their technology, whether it's, a CCH, a Go system, a Thomson Reuters, regardless who it is, many of these organizations, you can outsource your work to them. So yeah. We frequently talk about new competition coming to town to challenge the CPA firm arena, and it's the very people that we pay and support,
and
the people that we rely on, that now we're becoming even more reliant on, and who knows, maybe one day with tax simplification, we're not needed and they're all that's needed. So, look, it's getting back to the bigger versus smaller. Obviously, I said it's your life, but the one thing that I know is the greatest challenge our profession has faced year in, year out, whether it's like David said, 2008, that was yesterday, and here we are, it's 2020, this is today. If offshoring is not part of your strategy, you will not grow in a sufficient fashion that's possible. There's what's possible and there's what's probable. I know this. If you're not pushing to grow your revenues, okay, you're going backwards, okay? Because costs are rising, and it's even more challenging today in the staffing arena than it was pre-2008. And we see same-day offers. A most placeable candidate within 10 days is off the market, sometimes sooner. So,
and Phil, just kind of support that argument. When we started this probably 7-8 years back, well, I'm originally from India, so I have looked in, how Big Four and larger firms are setting up their offices, in India. And today, if you see, each of the Big Four has thousands of employees in multiple cities just catering their US business. So, well, what we realized is, because Big Four and larger firms, top 100 firms I'm talking about, has these deep pockets, so they have this money to kind of send managers to India, spend some money, invest some money before they actually started, producing results. This type of resources, small and mid-sized firm doesn't have. If they want to hire 5 or 10 people or 15 people, they're not going to India and get a part of the bureaucracy and take care of those compliances and take those local challenges on. They'll prefer that let's not grow, or let's keep the staff, because ultimately the dilemma is this. Sometimes I've been talking to small firms like you, and they say that sometimes I get clients, but I feel that if I add staff, and if that staff is not fully utilized, I'm not going to make any profits out of that client. So it's like chicken and egg situation to hire staff or to add client, and ultimately you're not doing both. So So that's where, we started this business. Coming back to the point, we started this business, that if we can, and this is how I always try to put it, that we are democratizing global access of staffing for small and mid-sized and regional accounting firms, which was never available to them probably before we started. So that's what we are trying to do, so that they can stay in competition. Just like, technology which used to be proprietary to larger businesses are now, are now being available to small businesses and small firms. We also wanted this access to be available to even small and regional firms. And that's where we came up with this idea that, let's say, if we can do something, that we help them in hiring a staff which matches their quality and requirement, and they work from our secured office in India. And if somehow we can win trust, probably this is the best thing that we can, provide to our clients. And I mean, it has been great since we started. Everybody is appreciating. Not that we had few complaints, but yes, all in all, it has been a very, very gainful and encouraging experience working with accounting firms. So concluding, well, our objective is, we want to help small, mid-sized and regional firms so that they can have the same level of competitive advantage that larger firms has. They can take, being small, they can still cater to the clients that they want. They can still charge the fees they want, and they can still run and, they can, run in those markets that they want. So as David said, I would reinforce that the choice is important. What they want to do. They want to stay regional, they want to stay local, or they want to have a presence in multiple states. Choice is them. Technology, staffing, practices should be available to them. And Whitman Business Advisors, for that matter, I gave you this example probably a couple of days back. Compensation planning, talent planning. Nobody has HR in small firms. Nobody has, advisor to decide how a partner would be paid, or how a senior manager should be paid in longer run. That's where Whitman Business Advisor kind of come in and coach, or otherwise this was only a privilege of, regional firms, or larger firms for that matter, where they can hire counsels and advocates for, doing this. So what Whitman Business Advisor somewhere is doing, apart from merger and acquisitions or advising on succession planning, is helping small firms to stay in business, to stay in competition.
And just picking up on that, I think what we also are doing, and this is bigger, better. I think what we're doing both at Whitman and Entigrity is perhaps not helping firms grow the top line, but I haven't paid my mortgage with the top line, right? Yeah. I think many of the smaller firms, what they care about is the bottom line. And many of our solutions are about growing, and growth is important, but growing that bottom line because it helps pay for vacations, unlike growing the top line. So that's my final thought for you, Phil.
Yeah, so I guess I kind of would wrap up, whether you're a small firm, a medium-sized firm, or a large firm, the challenge we all face is the same. Okay, there are regulatory challenges, there are challenges in getting new business. Year after year, the greatest challenge has been in the staffing arena. And, we're pleased to partner with Entigrity to help our firms, both small and large, plow through the challenges that they face in all these areas. And the one thing I do know is there are firms out there who take the ostrich approach, and they put their head in the sand, and they are not forward thinking. They made a decision once years ago that offshoring wasn't the right opportunity, and maybe back then it wasn't mature enough. It wasn't systematized the way it is today. And I believe for those of you who have taken that approach, you need to take your head out of the sand and take another look, because as Shawn said, Integrity's democratization and giving all firms the ability to have an office offshore that is supporting their efforts could be a critical factor in your achieving the growth that's out there for you. There should be no reason any firm should say to us, I'm flat. Because back in 2008, I said, flat is crap. And in 2020, I believe the same thing. High growth, high growth. So, been a pleasure chatting with you, and hopefully, we've got some listeners out there who are going to take action, because to sit and view and listen and go away and go back and do the same thing, I think Einstein said that's sort of like the definition of insanity. Take the steps you need to get yourself better, to get your firm better. And I'm here today with some people that can help you in those very endeavors. So
I think, Phil, your words of wisdom are going to have an impactful, are going to make an impact, and definitely there is a lot of right message for the firm in that, for their business, for their benefit. I mean, if they choose not to act, it's for them. So probably you and me can advocate best practices to grow at the end of the day. And we'll continue to make effort through our podcast and through our videos and through our chats. And but at the end of the day, they have to take the decision whether it is good for them or not. And if not, best of luck to them. Good luck.
exactly.
Mike.
And Mike, I'd like to thank you and Shawn for hosting this and having David and I on as your guests. Hopefully you've enjoyed our conversation, but I do want to thank both of you very much.
No, thanks, Phil. Thanks, David, for being with us. Yes, Mike, over to you.
Well, yes. Well, I was just going to say, gentlemen, thank you for a very intriguing conversation, and I found it very interesting on all sides. I'm not sure where I'm at yet. I'm bigger, better, smaller, whatever the case, but I think regardless of the size of a firm or the goals or the objectives of the firm, there are opportunities to partner with others, to take advantage of different services and professions and relationships that are out there in the industry, so that you can achieve your goals and objectives that you want for you as your firm. And so I'd encourage you to look at all those things. And that will be a wrap for today. Thank you all for attending, whoever joined us today. Hope you're doing well. You can reach out to any one of us through social media and or websites, etc. Be happy to have you. And again, I didn't introduce myself. I'm Mike Goossen, and I'm happy to have you today at this Build a Kickass Offshore team. And we look forward to hearing from you again, and have a great day.